our next topic of conversations in sports finance. We're going to have Thomas Patterson, who I'll introduce in just a moment, Kevin LaForce, and Rob Tilliss. So let's just get right to it. Let's introduce our next moderator here. It's Thomas Patterson, Trinity College of Arts and Sciences alum of 2013, just a year before I graduated, so we may have crossed paths a little bit here. And he's former member of the, you guessed it, Duke men's lacrosse team. A lot of lacrosse ties in this particular call. And now he's an associate at the Raine Group. So Thomas, if you're around, feel free to put your video on. And thank you for doing the moderating tonight. I'm going to go ahead and turn it over to you.
Of course. Happy to join. Thanks, Dan. First off, just want to thank the organizers of this conference for putting it together. Something that I really wish was around when I was there, and an honor to be asked back for it. So appreciate it. As Dan mentioned, I was lucky enough to go to Duke, and after graduating in 2013, went on to work for a company called Galaxioto Sports Partners, where I did investment banking and advisory work in the professional sports space for just over 4 years before going to business school. And since graduating from business school almost 2 years ago, I've been working for a company called the Raine Group, which is a global merchant bank that both invests and advises in tech, media, and telecom industries, with a particular focus on sports media and entertainment more broadly. Notably, we have an investment in the PLL, so there's a lot of tie-ins there as well. But needless to say, I'm really excited about this discussion. So to that end, let me introduce our two guests here. We have Kevin LaForce and Rob Tilliss, both who have had quite the careers in the sports industry and have had a hand in reshaping the landscape as of late. So first, we have Kevin LaForce, who is currently a managing director at RedBird Capital, where he helps lead its sports and media practice. Kevin notably also earned his MBA here at Fuqua, or there at Fuqua, I should say. So Kevin, it would be great if you could give a bit of background on yourself, your career path, and your current role at RedBird.
Yeah, sure. It's good to see you, Tommy. Nice to meet you, Rob. Good to see you. And thanks for having me. I have after Fuqua in 2004, I joined Bear Stearns as an investment banker, where I was focused on media and content. I spent 3 years doing that before going to the National Football League. I was at the NFL for 14 years. There, I focused on media rights, strategy, licensing, so selling media, live game rights, digital media rights, social media, sports betting, eventually into the marketplace, and thinking about strategy and how to reach fans and distribute NFL content, drive engagement, ultimately monetization. I also spent 7 years launching a group called 32 Equity at the NFL, where we invested directly on behalf of the 32 football clubs and the owners. So I had an ability to, from that seat at the NFL, spend some time thinking about direct investment and opportunities to drive value and kind of do business development through a different lens, not just selling rights into the market, but also investing in companies that the NFL and the teams thought might be interesting or strategically valuable to the brand or the teams or any of the kind of priorities that the NFL had. And then in June of 2021, after we finished our last round of television deals, I decided to join RedBird Capital as a managing director, which I am on the investment side here, spending most of my time focusing on our sports and media practice, where we invest all up and down kind of the sports value chain and media value chain, largely targeting kind of $50 to $150 million investments. So far so good. Relatively new to the firm with under a year, but really enjoying it. So thanks again for having me.
Awesome. Super interesting background, of course. And then next we have Rob Tilliss, who's the founder and CEO of Inner Circle Sports, a sports advisory banking boutique. And Rob, it'd be great to hear a little background on yourself.
Great, thanks. So I didn't go to Duke. I'm probably one of the few people on this that didn't go to Duke, but my son went to Duke. So therefore I am a parent alumni. My son was one of the founders of the Duke Sports Management Club. So I'm not sure how DSM ties into the Duke Sports Business Conference, but there must be some crossover. So my background is in finance. I spent 15 years at JP Morgan, all their predecessor banks in investment banking, grinding through the mill in the 90s of being an analyst to ultimately becoming a managing director there, and built a sports lending practice at the firm. We had a really good run in the 90s as kind of valuations exploded, media kind of took off. And then I left JP Morgan in 2002 to start my own firm, Inner Circle. And we have kind of three principal areas that we operate in. One is we help people buy and sell teams. So that's GP interest, LP interest. We do valuation work, acquisition financing, raising debt and equity capital. The second leg is we help people finance stadiums and arenas on a global basis. So that's both on the private sector for owner operators, as well as advising municipalities on negotiating with the private sector. So we're on both sides there. And then the third leg is we raise capital in the sports technology and services space. So there we're helping emerging companies in sports betting, sports tech, services, SaaS businesses, agencies, esports, sports betting. And we've invested in about 6 of those businesses that we're raising capital alongside of. So we're a registered broker dealer. We're about 12 people. I'm based down in Boca Raton, Florida, and then there's another group up in New York. So that's us.
Awesome, very, very impressive background as well, and hitting on all the trends that we're gonna want to discuss here. I guess to kick it off, first I'll do a little toss-up question. Over the last few years, we've really seen a significant amount of capital pour into the sports space from high net worth individuals, strategics, SPACs, private equity firms like RedBird. Can you just give us a bit of context behind why we have seen this rapid growth in investment over the last number of years, and why, in your view, are sports assets so attractive?
Sadly, both Rob and I are pretty old, so we've seen this evolve over time. So Rob, you want to take it?
You can start, I'll follow on.
Okay. So it's been interesting to watch. And, when I started in the NFL, it was 2007. There was no iPhone, no iPad. The social marketplace platforms was relatively nascent. Bandwidth was not happening. And so with that, really the sports business model was relatively straightforward. I mean, it was like linear television, free to air, pay TV, large media conglomerates distributing live games and some shoulder programming, but it was a pretty simple marketplace. And then as it happens to happen in most industries, technology started to proliferate and really disrupt in many ways the marketplace, but also create a lot more opportunities. And so when I started investing in sports back in 2013, if you talk to people who were investors, private equity or venture, generally they stayed away from sports. The opportunity set wasn't great. It was a bunch of monopolies, leagues and clubs. It was expensive and relatively perilous. And so it was kind of interesting. There were some things happening where Providence Equity had partnered with Major League Soccer to monetize, commercial rights. There were some other kind of limited investments in Formula One, CBC, so some limited investments, but wasn't a lot going on. And then as things started breaking over the course of, really the last kind of 7 years, and it's really accelerated in the last 3 to 5, at the root of it is really the proliferation of technology and the convergence of technology in sports. And with that becomes a much broader opportunity set, a whole constituent set of investors. And I think what you're seeing now is, you see linear television turning into OTT digital streaming. The classic example is you see trading cards turn into NFT blockchain and digital collectibles. .coms now social, and the proliferation of all that. And so I think with that comes a real opportunity for private equity investment and venture investment in sport. There's pockets within all of that ecosystem, which has got much more complicated, much more fragmented, much more dynamic. And even outside of kind of core investment in leagues and teams, which is also now kind of, accelerated and some for other reasons, there's ways to get into the sports ecosystem as an investor, as in private equity, and venture, whatever it may be, there's just a lot of different, pockets and dimensions to do that. And so you're seeing a great, substantial proliferation of private equity and private capital in and around sports, because by definition, sports is no longer a very simple model. It's a very complicated, fragmented, technology-driven ecosystem, and the technology is changing the way people consume it. And therefore, there are opportunities. And I think, as Rob can speak to very, very well, more so than I can, in the last 2 or 3 years, has been a less kind of secular circumstance with COVID, where now you're seeing all of these things change in terms of investments in teams and leagues, teams in particular, as it relates to investments in ownership stakes in these properties, as a result of, in some cases, policy changes, as liquidity needs and otherwise. But obviously, that's certainly Rob's bailiwick. So I'll let him expand on that.
I think that was very well summarized. I would have said 99% of what Kevin just said. I think that the two ads I would have are, number one is, I think real estate has been a big factor over the last 10 years. I think there's been about 25 billion that's been put into the ground. So there's been pretty interesting opportunities around stadiums and arenas as anchor sites for larger real estate development. If you look in like what's going on in San Francisco around the Giants ballpark, I mean, we can go down pretty much any city and there's some real estate development. So that's kind of been an interesting development. And then just to end on what Kevin's point was about the team and league investment, 10 years ago would have been like laughable that there were, people said, oh, there's going to be like a parade of people that are trying to put private equity into sports teams. I mean, we were out trying to sell LP interests in money losing sports teams, and sometimes we didn't get return phone calls. And now the demand is there. And the question really is why? Why is that like shift? Why has that happened? And I think one of the main reasons is the league, models have all really evolved over the last 20 years very significantly to where now they are much more cash flow oriented, number one. Number two is the growth. So as Kevin was saying, with the proliferation of all these various media angles, there's still continued growth. So if you look at like the compounded annual growth rate in the leagues across the board, I mean, you're looking at, low double digit, steady compounding growth relative to putting your money in the stock or bond market. So that's why I think people are interested, but you got to be in for the long haul, which I think the private equity investors are.
Yep, makes sense. And you both kind of touched on the proliferation of technology and the changes in media consumption and those types of trends. Kevin, you even brought up the NFTs and crypto space. Obviously, there's been kind of like the legalization of sports betting in the not so, recent past. But which of these spaces kind of is most exciting to you, or do you see the biggest room for opportunity?
Look, I think it's, the Web3 blockchain stuff is certainly super topical. Sports betting super topical, and I think they're early. The state adoption is still going to evolve, and the entire kind of Web3 thesis is out there. And but if you step back and you think about sports as it relates to how people consume content, and as the trends we've identified, where the marketplace has gotten so much more fragmented in the way and where people consume and how they spend their time and their wallet, it's just exploding, and it's going to continue to do so. I think the good news is, as it relates to sports investment, which you still have to be mindful of the dynamics of the key kind of constituents in the marketplace are going to be leagues and teams, but there's also some pretty scaled businesses that operate in between. But even in a marketplace where pay TV is dislocating and people are consuming in different ways, and social and other fan engagement opportunities and technologies are kind of making it more difficult to reach people at mass like television used to be, sports still stands out, right? And you're seeing it in a lot of different spaces, and whether it's on a relative basis for consumption or whether it's trying to bring somebody onto your platform as a customer acquisition, sports still carries a fair amount of water in the marketplace. It is the one place where you're going to have consistent and relatively reliable demand from customers in the market. And so if you're a technology platform or if you're a media platform, and you're starting to even see the SVOD, the Netflixes and the Apples of the world starting to sniff around sports, because there's a real reliable demand and a real relatively scaled audience that you can bring onto your platform by leveraging sports. And the playbook's tried and true with the NFL. It was Sunday Ticket and DirecTV. You know, Ezra's organization DraftKings has done a great job partnering with media companies. You know, Dapper Labs and the NBA. So it's like these are very still powerful platforms that have these that really do drive fan engagement. And so I think as you see more and more of this stuff happening in terms of opportunities for investment, I mean, I think you follow where there is, you know, where there are opportunities for people to kind of drive, you know, meaningful engagement in sports. I mean, and I think some of the platforms that we've identified, you know, I think, you know, the consumer-facing platforms that can leverage sports to bring people onto their platforms and drive engagement, and then to build off of that into other aspects of their business, maybe even outside of sports, are kind of themes and trends that are interesting to us when it comes to opportunities.
Makes total sense. So Rob, you hadn't kind of brought up before how the kind of asset appreciation over the last 10 years of sports valuations has kind of outperformed some of the markets. We've obviously seen some kind of record-setting valuations as of late, and kind of across the board over the last decade, valuations have been kind of on the rise across the board. So how does even one kind of go about valuing a sports team? How do you kind of put a framework around that?
So yeah, it's a bottoms-up analysis. It's looking at the fundamentals like you would of any other type of business or company. You're looking at the market that they're operating in. You're looking at, you know, what their financial profile looks like, what their projections look like. But the actual valuation is really done with three different methodologies. The first is, you know, you're looking at hopefully a cash flow multiple, which we can in the NFL, not as easy in some of the other leagues. The second is we're looking at revenue multiples. Then the question is like, okay, if you're looking at revenue, not all revenue is the same. Not all markets are the same. What's the strength of that, the reliability, and drilling through that. And then the third is other comparable transactions. Again, that's a little more art than science because, you know, Los Angeles is different to Memphis. So it's kind of weaving those things together, creating kind of a football field of, you know, valuation, and then assigning some weightings to each one of those methodologies to ultimately come up with a value or a range. So that's basically how we go about it.
Do you feel like as of late, the traditional valuation methodologies have kind of come into play a little bit more? Like historically, when the Steve Ballmers of the world come in and purchase something for $2 billion, there's kind of almost like a trophy asset factor to it.
I mean, yeah, yes and no. The no part is, there, you know, there's some financial engineering that goes on when you think about valuation. So when Steve Ballmer buys for $2 billion and everybody goes crazy, you know, he's getting some pretty significant tax advantage. So are you looking at it like pre-tax or after tax? Number one. Number two, a lot of sports team owners are using leverage in terms of borrowing against their own balance sheet. So you think of it more, it's like Wall Street parlance, it's a carry trade where they're basically using debt and 50-cent dollars because of the tax savings and using that, holding an asset, letting the equity value of the asset grow, and then selling it in the future on a leverage basis. Now, yes, there is recapture of those tax savings when you go and sell, but over a long period of time, 20 years, that's pretty compelling from a return standpoint. So it's often said that, you know, it's a trophy asset, but you really have to get under the hood and really kind of sensitize it to really understand what's going on.
Yeah. and hindsight 2020 on that one. I don't think anyone wouldn't have made that investment if they were in his shoes at that point and had the capital. I should caveat. So Kevin, can you tell us a little bit more about like the types of asset classes that RedBird, the types of investment that RedBird's typically making? What are you looking at, more earlier stage companies, mature companies, typically making minority investments or control stakes? How do you think about that?
Yeah, it's a little different the way we approach it. And so the reason I came over is when I was at the NFL, we had a business that was called On Location Experiences, and that had about 3,500 Super Bowl tickets. It was a premium hospitality business where you would sell, a behind the scenes experience and a VIP experience in the Super Bowl. And it was like 3 people and 3,500 Super Bowl tickets. And when we looked at it and we're like, it's not doing anything. It's 20 million in revenue and 10 million in operating income. And we said, why don't we put this out in the marketplace and give it a long-term license to do what it does, but like put capital behind it and professionalize the management team and try and use the Super Bowl as kind of an anchor asset to then build a real business, right? With a balance sheet and an M&A strategy and a professional management team and maybe more inventory, with the benefits to the NFL of, creating a new licensee, cash flow, having an equity stake in the business, having someone who really professionalizes and cleans up the environment around the Super Bowl to make it a really professional experience, et cetera. And so I give you that example, and we grew that. We grew that business to 55 million in EBITDA and 550 in revenue because we partnered. I partnered with RedBird on it, and that's how I got to know the firm. And that example is indicative of kind of how we focus our efforts here. And I liked it as part of that partnership. I really got exposure and really liked it. It was different. I had a lot of friends and colleagues who were doing private equity around different theses and different shops with different mandates. But the approach to capitalizing intellectual property and partnering with brands and building businesses and having people who can not only bring capital, but also different experiences and expertise in sports and media to bear is really how we approach it. We can go small and early stage. That becomes, if you're trying to manage a portfolio venture, that's not easy, and it requires, obviously thinking about like the totality of the portfolio. So typically it's $50 to $150 million investments. Minority positions are fine, but it's certainly identifying opportunities, up and down the sports, around the sports and media value chain, to partner with IP and build businesses. And so the On Location example is a great example. We partnered with MLBPA and NBAPA and other players associations to create one team, which was kind of, again, out of whole cloth, capitalize the business, take advantage of an opportunity where we saw player and team, brands and the opportunities to monetize the player name, image, and likeness, through obviously the growth in the market that we described, to again do the same thing with people who are experts and surround it with the right capabilities to grow businesses. So that's true, around teams that we've invested in, players. We're starting a league in the XFL, media opportunities and otherwise. So, we're again pretty agnostic in terms of stage. We tend to be more growth, but we try and find proprietary opportunities where we can partner with intellectual property, because at the end of the day, with all the stuff we've been talking about, the content still remains the king, the IP owners still remain king. And if you can partner with them in the right way, it really gives you an opportunity to leverage, the good favorable dynamics in the marketplace. Typically, oftentimes leagues and properties won't have balance sheets. They don't like to take a lot of risk. So there are arbitrage opportunities that can be a win-win for both intellectual property owners as well as private equity.
Absolutely. And speaking of the XFL, could you maybe shed a little bit more light on, I guess, one, your role in remodeling the league, and two, I know there was some recent news that came out last week about a potential partnership with the NFL. So I don't know if anything you can say about that, but that I think would be super interesting for the audience.
Yeah, I'll be quick. I went from the NFL to the XFL, so it's been a journey, but I feel good about the prospects. So before I arrived here, RedBird, again, indicative of what we were just talking about. RedBird acquired out of bankruptcy the XFL with Dwayne Johnson and Danny Garcia. And I think the analysis that was being done here was obviously there's a lot of demand for football in the United States. While there has been struggling to find success for spring football, when you bring to bear the adequate capital and capabilities from RedBird, and then the proprietary nature of having Dwayne Johnson and Danny Garcia as partners, you may have something quite interesting. If you observe what happened in XFL 2.0, 750,000 to 1 million viewers is nothing to shake a stick at. How that would have trended over time is TBD, but they almost opened up, the certain stadiums in St. Louis. I think they got 40, almost 50,000 attendees. So there was some observed, demand in the marketplace for spring football that gave the firm adequate conviction around, essentially rebooting it and doing a full startup. There's a few things that we've been focused on: operational risk in terms of how you run a spring football league, focusing on football, hiring real people with NFL heritage, but making sure that they're thinking about it in a really progressive way. It's a property that's going to be focused on fan access and players. And then with the NFL, it was kind of a no-brainer. Having been there, for 14 years, Russ Brandon, who we hired to run football, was there for 25. And I sat there and saw what the NFL wanted to do, but couldn't because of its scale. And in terms of finding opportunities to innovate around football, whether it's player health and safety, diversity, equity, inclusion, technology in football, sports betting, game presentation. There's just a lot of things that the NFL wanted to do, but because of the nature of the beast and the size of and scale and the brand, they didn't have like an accelerator, an incubator to do it. So when I showed up here, the first thing we thought of was like, why wouldn't we go and see the NFL and present this as that opportunity? So that announcement was the result of a lot of discussions, especially on the football side for the NFL, that we think we can really serve a purpose for the league to help grow the sport of football in ways that the NFL has a vested interest in seeing happen.
What's the coolest thing, Kevin, we're going to see for the kickoff of the XFL season? Innovation.
I think it's certainly going to maintain like all access, right? We're going to make sure that how it gets presented is going to be for the viewer, whether it's streaming or linear. There's going to be certainly access to the players, access behind the scenes, access to the locker room, audio, etc. Sports betting is going to be front and center. Interactive gaming is going to be front and center. Hopefully we're going to be able to figure out ways to leverage Web3 to make sure there's loyalty, where the fans could really feel like they have a role and a say at the team level or otherwise. Because the best thing about it, as much as there are challenges to launching a new league and to watch what the PLL has done has been amazing. There's no encumbrances. There's no legacy models. I don't have to worry about weaning off of pay TV and jamming 75 ad units in the game. So that enables an opportunity to create a property that's really about the next 15 years and thinking about fans who are consuming content in a really different way, which is awesome. And then when you're partnering with the likes of Dwayne Johnson and Danny Garcia, I mean that's truly proprietary. He's got 350 million social followers. He's dug in on this, loves football. You saw him at the Super Bowl, so I mean that's no coincidence. So he's all in. So that truly gets us excited.
Yeah, if we have time at the end here, I'd love to hear what it's like working with The Rock. But Rob, I'll kick it back to you. Professional soccer has always been an interesting trend to track in the U.S. Soccer has obviously kind of been one of the most popular sports worldwide and popular at the youth level here in the U.S. But the professional league has always kind of trailed its European peers, but recently has shown a lot of growth. So just kind of curious to get your view on the MLS and where you think that league is going.
Growing quickly. It hasn't obviously been around as long as the other leagues in this country, but I think they've done a great job of bringing in new owners that are really committed. They've added a lot of new markets in the last 10 years. We did 4 MLS transactions last year, so if that's any sign of like what the level of activity is. So when you think about soccer in this country and the demographic and the growth, we're bullish on. I mean, you have the World Cup coming in 2026. The women's game is building. You saw the lawsuit got settled with U.S. Soccer, so that's a positive step forward. So all in all, I would say on a relative value basis, there's been a lot of interest in MLS because I think you're still getting in on their investment curve. So they've done a great job building stadiums, bringing in really strong ownership groups. bringing in and developing players through youth academies. But I think their next phase is going to be all about, kind of taking the next step up in player talent and development so that the game continues to improve in the US, so that they're not necessarily always selling, the top quality talented players over into Europe. And those players who want to continue to play here. So, I remember we did all the work for Atlanta when Arthur Blank brought the MLS to Atlanta, and we had no idea that those numbers were going to be as high as they were. I mean, we basically had I think they exceeded our numbers by 30 or 40%. So it's been really, really successful, and we're bullish.
Yeah, it's been interesting trend to follow for sure. So I guess we'll pivot over to the Q&A from the audience, and take a few of their questions in the last remaining 15 minutes or so. Probably top of mind to a lot of the students on the line who are interested in getting involved in sports, but kind of career advice. How would you suggest kind of breaking into the sports space if you're putting yourselves in the shoes of those mostly undergrads who are on the phone?
So I'll take a first crack. I advise people all the time. I think you need to develop some basic skills first. So I went down the banking finance route, which was a complete guess at the time, honestly. I didn't know I wanted to be in banking, but I answered a message board, as Kevin will appreciate, at college, and interviewed, and I got the job, and I took the job. But I think you do need to develop some foundational skills, whether that's in marketing, finance, consulting, accounting, wherever you are, because I like what I suggest to people all the time is it's good to kind of work outside the sports industry for a few years, and then you develop that foundational base that then you can bring to the sports industry. It's a little bit hard to join a team and just work in the ticket office and kind of grind your way up. So that's been my typical advice to people, is build your skill set and then try to lateral your way over into something by networking and continuing to stay connected to the industry.
Yeah, I agree with all that. I would only add, and having been asked this question also over the years, it's helpful to define the space broadly, right? I mean, people think of sports and they're like teams and leagues, but all the things we've been talking about, over the last, 20, 30 minutes has been a proliferation of what the definition of sports actually is gotten so much broader than it was 10 years ago. So that obviously represents, technology companies, media companies, agencies. You could be representing the buy side as a brand who's investing in sports from a marketing perspective, obviously leagues, clubs. So I think having a broad aperture in terms of how you think about getting into sports, quote unquote. I also think, it is iterative. I certainly agree with Rob, growing up in sports from the bottoms up. I mean, putting aside, Goodell was there from day one and is now commissioner of the National Football League. It's a harder path. So developing some hard skills, like I came in through the banking side as well. And you can kind of, these organizations certainly are getting more sophisticated, but having that outside training, whatever it may be, marketing, finance, et cetera, I think is valued. And you can come in at a level where you really can find yourself laddering up quicker. So I think that's helpful. And then just, it's a process. I think you constantly want to be deliberately and proactively identifying people that you want to be talking to and learning from, and taking those conversations and leveraging them in other conversations, and finding your way into a place where, it doesn't have to happen day one. You get with a group that you can learn from and that can put you into the next step of your career. It doesn't need to be that you're in your final spot, when you graduate. It takes time. It's taken me 18 years to be where I am today. So certainly looking at it in discrete phases is, I think, a smart thing to do. Yeah.
For what it's worth, I would second all of that, or third all of that, I should say. So next one, we've got a question from the audience about kind of newer ventures, newer leagues, pop-up leagues, whatever you want to call them. I know we've hit the XFL a little bit. We had, I guess, Paul Rabel on here earlier talking about the PLL. What kind of other exciting new leagues are you seeing? Do you see kind of potential for?
We're an investor in the Cornhole League, which is a professionalized league. Don't laugh. It's on ESPN. You've all watched it. You've even watched some of the celebrities throw the bags. So yeah, I mean, we're working. We have been working for a long time with the National Lacrosse League, the Indoor Lacrosse League. It's been around for 30-something years. It's making pretty good strides. Yeah, I mean, there are a lot of various emerging leagues, I think, that'll find their kind of niche place. The question is really, what's the business model look like in the new world, right? Is there digital, over the top, direct to consumer? Who's buying it? You know, can they attract a big enough audience that they can really scale the business? So, and scale it effectively so that they can really make money. I mean, that's why, to me, like, the esports side of the house is pretty interesting because it's a digitally native business. So if you can build something and build a brand and have, you know, attract a lot of fans / you know, celebrities, brands, etc., you can really scale that business over time. It may take a little bit longer, but you can be able to manage your costs. So we're looking at all sorts of new opportunities all the time.
Yeah, I mean, I would I think it's exciting. You asked a question about areas of opportunity that you're focused on, and I referenced kind of platforming intellectual property as kind of being really a core tenet here. But I do think disruptor or challenger sports is also super exciting. And I think you know, for a lot of reasons, whether it's kind of the overtime elite, obviously, you know, things like drone racing and esports. You know, there's a number of them that I think are really interesting opportunities that are, by traditional standards of, you know, they're less scaled, but they have a lot of attractive attributes as it relates to the audience, as it relates to how they can be monetized. I think over time you will see the traditional media model where it's reach-based and aggregated eyeballs at scale, you know, which is now 75% of the NFL's revenue, and what everyone points to when they talk about franchise valuations, generally speaking, across sports. My guess is that's going to be diversified into a number of fan engagement, you know, revenue streams at scale. And so, you know, and it's going to be a function of convergence. It's going to be a function of how people consume and the expectations people have on how they consume and where they consume. Again, technology underpinning all of it, but you know, where once it was, you know, linear television and pay TV sitting on the bundle, you know, in the future is going to be probably a combination of some type of streaming technology, interactivity with commerce, sports betting, you know, NFT, loyalty, Web3 mechanics, all the things that kind of do the same things, but in different ways, appealing to different audiences. And so that simple revenue stream on media that drives your franchise valuation is going to become a diverse set of digital revenue streams that are attached to a bunch of different interesting fan engagement mechanisms across a bunch of different aspects of the marketplace. And I think properties that are able to effectively do that over time, even if they're not going to turn into, you know, $5 to $10 billion a year, you know, properties, can be very compelling and engaging, and especially with an audience over the next 20 years, it's going to be, you know, younger forming households and generating income. And then lastly, I would say, which is a very interesting opportunity, is aggregating all those. So thinking about opportunities to take a couple of those things, put them under a common monetization platform, and think about aggregating some scale of consumption, but being able to sell them into the marketplace under, you know, a single entity or a single platform that can take those and lift, you know, have all, you know, lift all boats with a rising tide of having a single platform, really being able to drive distribution, to drive monetization, drive different fan engagement and opportunities in the marketplace. So I think it's a really interesting area, and one that I think is redefining what sports is. And it's important for people of our vintage, Rob and I, respectfully, to not lose sight of the fact that sports is no longer necessarily going to be a ball, stick in a field, but it's going to be a lot of things that are underpinning it. It's going to be kind of technology and digital native kind of orientation.
And kind of piggybacking off of that, we have another question here talking about how kind of data showing that there's a lot of kind of declining viewership from the Gen Z and millennial audience of traditional sports teams and leagues. So the question is, like, how do you marry that with the view that the valuations of teams themselves are going to continue to grow?
Well, yeah, the live content is still pretty valuable, right? Like you have, the NFL is still drawing the biggest ratings on linear television, and there's still a lot of NFL fans. So I don't see that just model completely going away. I think what the leagues are doing is they're saying, we'll adapt and we'll find fans wherever they are. So direct on their phones, on their iPads, create a la carte bundles, create, different packages, highlights. So they're going to adapt to it. They there's some serious experts there that know what they're doing and know that, just keeping things the way they've been the last 20 years is not necessarily going to work. And they still have the content that's driving most of the eyeballs at the end of the day. I mean, you're talking about the NBA, I know Overtime started their league, but, the NBA has probably the most valuable global content, in my opinion, just given the nature of their players that people are going to always want to watch. So I don't see a huge fall off, and they're only going to figure it out and, continue to grow.
Yeah, I think it's a good question. I think what sports has going for it is all the things that Rob just outlined, the relative strength of consumption, relative scale of consumption, even in a fragmented market. I think scarcity is obviously going to carry a lot of water here in terms of these assets, and the fact that they are limited in number are going to continue to drive demand and franchise valuations. And then I think the growth in the number of ways that they can drive engagement and monetization because of the different ways people are consuming. Those are all positives for franchise valuations over time. But that being said, I do think the NFL being probably at the top of the heap, as you work your way down into the sports properties over time, if as you're thinking about a younger demographic who's got more and more ways to consume content that is, whether it's sports, whether it's music, whether it's social, whether it's chat, whether it's Fortnite, whether it's Roblox, whatever it might be, there's just going to be a proliferation of content and entertainment that people, especially digitally native people and folks who know no other way, are going to continue to spend there's only 24 hours in a day. And they're going to continue to spend their time doing more things. Now, consumption may be going up overall, but they're going to be doing it across more things. So at some point, there's going to be certain properties that may have, may feel a little bit of pressure because of the way people are consuming content, and that relative strength and the scarcity value may be a little less strong than an NBA or an NFL. And some of those middle tier or lower tier properties, you can't just invest in assumed franchise valuations, assuming it is a franchise model, are going to continue to go up forever.
Got it. Yeah, all makes sense, and super interesting trends to follow. Getting pinged here to wrap it up. So I just want to thank Kevin and Rob again for your time. Very interesting conversation. I'm sure all of those on have learned a ton, and hopefully have continued interest in breaking into the sports world. But with that, I will kick it over to Dan.
Thanks so much.
Perfect. Thank you all for your time, Thomas, Kevin, and Rob. Excellent. Rob, you could be an honorary Dookie for tonight. You hopped on the panel, so I think that works. Awesome insight, as always, from all three of you. Thank you very much. We're going to take a 60-second break, and then we'll be back with our next panel, which will be sports journalism. Do not go anywhere.